the prices of gold this year really haven't moved at all. It's been muted. Tell us why is that? Tell us why we haven't seen more of a reaction perhaps to what's happening in Iraq and gold prices.
I think the biggest driver for gold prices in the past or in recent years has been the struggle of fixed income as well as, the turmoil in fixed income and the struggle of equity. We have seen globally that the global uncertainty, the demand for gold, particularly the global financial crisis, the kind of scare it was able to spread, that created a huge demand or surge in gold prices, demand for gold and subsequent surge. At the same time, there was another factor that for the first time in the last 8 to 10 years, we have seen the financialization of gold. And those things are, getting marginalized. A lot of investors have bought into gold, and as it became easier and was democratized, the ownership of gold through these financial instruments, whether it be derivatives or the ETFs. And I feel that, with growth coming back or optimism coming back, particularly in Indian market as well as, other places, besides that, gold prices has come to a level where, investors are jittery. The real consumption demand for gold has also been muted, particularly so in India after the clamping of the customs duty. That is likely to go away with the new government, but that could further dampen the prospects of gold in the short run. So I think with growth in place or the change at the same time, we should not forget the fundamentals, that all other asset classes generate an income or have potentially generate growth because the underlying asset is productive in a certain way. You earn interest, or you are a owner or a proportionate owner in a business entity. But that is not true in case of gold. You hold it and it does not produce an income. The prospect for gold is entirely dependent on more investors developing or liking, developing a fancy for gold, and that has come to that is decelerating on a relative basis. So my sense is that it is not a great thing. It is not a great approach to be investing in gold even now.
Well, Dhirendra, in that case, what do you recommend ETF investors do now? Should they be stopping their SIPs and pulling their money out?
Yes, I would strongly suggest investors to stop their SIPs. Not only stop their SIPs, if this was your investment and you were getting carried by the performance of gold in recent years, I think it will be useful to stop your investments in gold ETFs. And not only that, take your money back, put your money into equity, and if that is your long-term money. If it's your short-term money or medium-term money which you need it for a predictable goal, put that money into fixed income, you will be better off.
So are you saying fundamentally that we should not have any gold in our portfolios at all at this point? Should we stop investing in gold entirely?
No, I have turned very conservative on gold, and so investors should look at gold as a consumption, feel happy about it, buy your jewelry, keep it in your locker, and that is entirely a matter of as much money you can allocate, or as much money you can safely spend on that. Look at it as a spending, look at it as a consumption, don't look at it as an investment, and you should do it for your pleasure.
Alright, so gold is particularly spending, it is not saving or investing. Let's take a few questions. Pankaj has written in. Now he wants to invest 10,000 rupees every month in mutual funds for the next 10 to 15 years. He wants you to give him some options, Dhirendra. He's given us a list of what he's currently investing in. 42,000 rupees in the LIC Jeevan Anand plan, 50 lakh rupees in the Relegate term plan, and 10,000 rupees per year in the PPF. He wants to know if he should continue with all of this. First of all, he has 2 insurance policies. He obviously doesn't need one of those. And does he need to have a PPF if he has a 15-year horizon? Would he be better off looking at equity?
For Pankaj, my suggestion is that you need to do a complete rejig of your portfolio. Stick to your term plan, hold that. Jeevan Anand, you need to seriously consider. Also PPF of 10,000 rupee. All this money should find its way into an equity fund or a balanced fund. Because for a 10 to 15 year time period, you don't need any of these. As you get closer to, and have your emergency fund. Have the essential money which you are likely to need at any time. All that money should be in a fixed deposit or in a manner which is accessible depending on your circumstances. Beyond that, all your money should be into an equity fund. Equity fund there could be many ways. As you seem very conservative by your choice so far. I would suggest that get started with a balanced fund, invest regularly, stop your Jeevan Anand and PPF for now, and you'll see the benefits.
All right, another question very quickly. Ram has written in, he invests 6,000 rupees every month in the Franklin India Blue Chip, HDFC Equity, IDFC Premier Equity and the Reliance Equity Opportunities for the last 6 years. Now his goal is still 8 or 10 years away. He wants you to give him any other funds he can use or replace in his portfolio. He also puts 50,000 rupees a year in the PPF. Dhirendra, that list of funds is largely the funds that you recommend. So he's obviously someone who's following your advice. Would you like to make any changes in his portfolio?
Some of these funds have slipped on the rating, but they are not disappointing funds. Your selection is still outstanding. I would say that the only fund, not because the fund has actually declined on performance, but given your time frame, I would like you to switch to a more diverse fund. So Franklin India Blue Chip, which remains an outstanding large cap fund, should be substituted by a little more diverse, something like a Prima Plus. Rest of the funds, they have slipped on the rating, but they are not disappointing fund, and most of the funds are still good, well performing 4-star funds as well. So stick to your plan and maybe consider, and it's not a very urgent thing. Franklin Blue Chip remains a good fund. You have a good portfolio. At best, substitute that with more diverse fund. That should be good enough.